On this video, we will look at a secondary buy signal that occurs often in normal stock movement. It is especially important to us when we have a strong stock moving up over a long period of time and then consolidating for a short period before possibly resuming its up move. This could show as a stalled movement in a column of X's, or as a reversal into a column of O's that may only go 3 or 4 O's deep. We want to know what to expect next and what type of strategy to use and when to apply it. The best big picture view of a possible bull flag situation occurs when we have had a long uptrend in the stock and for no apparent reason the stock starts moving sideways or down slightly. Of course, our concern is that the downtrend could continue for a long time, causing us to lose any gains we may have already accumulated or place an option position in the danger zone. If we are not in the particular stock when a move like this occurs, we would not want to enter a new position until we get some indication that the downward move is over. If the stock starts to show signs that the up move will continue, then we want to jump on it as quickly as possible for the best option price and profit potential in the strategy we decide to perform. Realty Income is a stock we watch regularly and have used in covered call trading for a very long time. When this move started, we were already in an uncovered put option that was placed in January. Look at the chart about February 13th. The stock started moving up radically, at least for this stock it's radical, to about $26.50 a share. This is shown by the blue arrow. It continued its move to the green arrow and then started drifting sideways and down. We had sold a February $25 put option on the stock back in mid-January for $850 when the stock made a reversal from its lowest recent price, shown by the blue arrow. The trade concluded successfully with the option expiring about $25 a share. We now have a problem in which we must decide what to do next. At expiration, the stock was moving down slightly and we needed to set up a new position. Should we set up a position based on the stock's downward movement or assume it will continue its up move? There was no information on the chart about what to expect, so we waited a few days to get a better feel for what the stock would do. So at the end of February, we had a profit of $850, but we did not own the stock. Ultimately, we wish to set up a position that will conclude with stock ownership, and of course we want to accomplish this at an attractive price. We waited for an indication that the stock, to see what the stock would do. We got it in early March when we saw this bull flag pattern develop. The stock drifted slightly down for several weeks in a very narrow channel. The two red parallel lines show this channel perfectly. In order to confirm the bull flag, we needed to see the volume decline at the same time as the price was declining. The blue line shows the volume tapering off very clearly. Now all we needed to do was watch for a reversal or breakout to occur. The price started moving up and the volume also started moving up at the same time. The dashed blue arrows indicate that both the price and the volume increased on the same day. We have our perfect reversal. The next thing we wanted to have happen was to have the price closing at a higher price for 2 consecutive days, or just make a higher high for 2 days in a row. At this point, we were convinced that the uptrend was going to continue for a while. So we bought the stock outright and sold a new March $25 put for $350. We could sell the put because we were reasonably sure the stock was going to move even further away from the $25 strike price. We now were set up with 1,000 shares of the stock and an open, uncovered put option. We had accumulated the $850 for the old put option plus the $350 for the new put option. The general market seemed ready for a rest after its big moves during the end of February and the beginning of March, so we figured we might not see any really big action on this stock, which is not really an overly active stock in the first place. So at this point, we figured that the stock would idle around $30 a share, so we went ahead and also placed a covered call against the stock we just bought. Just before expiration, we sold the March $30 covered call, bringing our profit up to $1,500 for our option trades. On expiration Friday, the put option expired with our gains secure. The call option was exercised against us on Friday, forcing us to sell the stock at $30 a share. This surprised us because the stock was trading below $30 a share in the open market. But it wasn't the end of our world. We anticipated this could happen. We immediately placed a market order to sell a new put option against O for $1.20 a share. This brought our total option gains for this series of O option trades to $2,700, and we received an additional $1,500 for our sale of the O stock. Our total gain for the 2 months is now set at $4,200. O can either continue its climb with our profits at $4,200, or if the stock continues following the red bar from Friday's trading, we will buy the stock again at $30 a share via the open put option. If we only had purchased the stock during the same time period, we would have had a nice profit of $1,260 for that same period. Because the stock moved down so far on Friday, it would be reasonable for an investor or trader to exit the stock after that down move. If you look at our website under covered calls, you will see that we have been doing these trades with O for many months and have accumulated nice low stress profits on the stock. Of course, you're not required to trade the same cash amounts we used in these examples. You could trade larger or smaller positions if you prefer. O also pays a very nice dividend for the months we are in the stock, and this further adds to our income over the long term. The company is unique because they pay the dividend every month. What we try to show with this video is that even if you are already familiar with options in general or specifically covered calls, there are many subtleties that can advance your money-making capabilities for this technique, plus many others that we detail in our CD course. Our course covers many areas of investing in options and leaves nothing for you to wonder about. After taking the course, you will be well versed in all the aspects of doing the trades we profiled, as well as many other strategies and techniques. The goal for us is simple: to teach you to be able to generate consistent profits every month with very little stress and anxiety. Good luck and happy trading.